Owners of small businesses often use the company's funds to pay for their own personal expenses. To enter a transaction like this, you need to have an account on your chart of accounts named Owner's Personal Purchases or Owner's Draw. To set up that account, first go to the chart of accounts by clicking on Accounting and then choose New. The category type to create here is Equity, and the detail type is Owner's Equity. Name this account Owner's Draw or Owner's Personal Expenses, and then save and close. To enter a transaction like this, open the Create menu, and then enter an expense or a check, depending upon how it is that the owner paid for this particular purchase. A check would be used for any physical check, and an expense is used for anything that is not a physical check. The owner of this business went to Bob's Burger Joint and bought a meal using the company checking account, and they used the company debit card with that purchase. In the account details area, enter the equity account you set up earlier, which is the owner's personal expenses account. And here you can also enter a description of the purchase, along with the amount of the purchase. This transaction will reduce the company's bank balance, and it will also decrease their equity from the owner's personal expenses equity account. Now let's save and close. Now let's look at the impact of this transaction. First, go to Reports, and then open the balance sheet. Up at the top, we can see that the checking account balance has been reduced by the amount of the transaction. And scrolling down to the very bottom of the balance sheet, now we can also see a negative $8.50 worth of equity because the owner spent some of what the business is worth to them to buy a burger and fries.